I'm working remote today. So if anyone's out there, give me and Pedro a shout out. Everyone, welcome to DYOR Live here on the DYOR Media Network. My name is Tom, otherwise known as Striking, here in the digital media world. So glad to be hosting another episode of this great show we call DYOR Live, along with my co-host in the box here, Mr. Pedro Garcia, the crypto chart analyst. Today is Technical Tuesday, ladies and gentlemen, and it is Tuesday, August 12th, 2025, one day closer to the end of the year, one day closer to, as Pedro would say, Jesus' birthday, and one day closer to the sun going supernova and ending all this business we call economic indicators, core inflation, and deficit spending. But that's all for later in the show. Right now, I'm a little bit remote right now. Gotta fix my screen here. Can't drag that over there. Okay. I am remote today. I'm on my way from the great country of Kanukistan, back in the States, on my way to meet Pedro. That's right, ladies and gentlemen. Wednesday, tomorrow, I will be in the studio with Pedro, live in the same place, if you can believe it.
Yep.
Anyway, the Mrs. Striking and I are doing a little road trip to see some relatives this August summertime, but that doesn't stop us from bringing you this great show. Anyway, it's Technical Tuesday. That means it's Pedro's day to star and give us the goods. Pedro, today the CPI came out and it was as expected. In fact, one thing was like 1 percentage point better than predicted. The market had it priced in. Didn't really do much, but it was good news for everything. Wasn't anything unexpected. President Trump didn't have to fire anybody at the Bureau of Labor Statistics again for revisions that were way out of line and stuff like that. So good news today compared to the non-farm payroll week, which was a disaster recently. Caused quite the stir with the data that came out. In the way, first of all, the way it came out, the revisions that came out, and the reaction from the White House about it. But this time, a big nothing burger, which actually is good.
This is good. I don't know.
From the Pedro perspective, how did today's nothing burger affect the markets?
So when you look at the market at large, right, we're watching really the nuances of things, and it's good volume. We saw things go in, but I'm not seeing any really demand wick. They didn't push it down, which means that they knew it was going to go up. They pushed it down yesterday. And so it's just, I don't know about the numbers. Like, again, like, is Trump looking for yes men or no? And so it's like, we actually went down a little. Like, it wasn't that big of a deal. Like, people are like, oh, it's a nothing burger. But the reality is that we saw inflation actually go up, right? When you look at it, like, like, look at it right here. We literally saw year over year since from July, it actually went, where is it at? CPRC, there we go. Went up 3.1% here. And this is where it's like, I don't think it's a good thing. We're seeing inflation go up. It is not one of those things. I think personally that it's a nothing burger. This is the canary in the coal mine. And so, like, we're watching these things happen, and it's like they're making short of it. But like, why would they be piling into bonds? Like, if they expect that the Fed is not going to drop and we're not going to have a horrible situation, then they wouldn't sit there and be piling into bonds and yields, right? Like, they wouldn't be doing that. Like, we're watching this stuff happening. Excuse me, not bonds, but yields. So they're buying yields, expecting it to go down. Right,
buying the higher yield, knowing that future yields will be lower.
Yes. And so this is one of the, this is, you wouldn't play that round when I say bonds
Well,
having yields. Go ahead.
the talk on this on the street this morning, otherwise known as Bloomberg Radio, that I listened to during my drive, was the consensus had formed that they're going to have to cut rates. And I wouldn't say that everyone was in agreement. I said most of the people they had on the show, on the Bloomberg surveillance show, said that they're going to have to cut. You know, one group was talking about more than 100 basis points soon, and other groups were like, "Hey, you know, this hidden inflation hasn't worked its way through the supply chain yet, and the people that don't see that are mistaken." So there was both views out there, but I would say most of the views encompassed, all right, the tariffs didn't affect the inflation that much. The economy overwhelmingly is slowing. You know, everything's in balance, but it's slowing in balance. That's kind of what they said. So they have to cut rates to spur things. And so from my perspective, you know, I've been in the financial markets a long time, and the economy a long time. But it was confusing to me. It was confusing to me because people that have been doing this their whole lives are saying each person is an idiot.
So look at it like this. We've talked about this in the beginning. I said Trump needs to create real manufacturing jobs. For every one manufacturing job, it actually produces 269% to the GDP. So for every $1, $2.69 is created and generates GDP within the United States. If he's not able to do that, people will not have living wages to be able to keep this economy going. This is an important thing. People are being laid off. We're watching payroll drop. We're watching numbers of hours that people are being worked dropping. We're not seeing pay raises go up at the rate of inflation. Things are slowing down. We are seeing this. And these are the numbers. And when you go back and you look at the previous numbers that the Biden administration and a couple months that the Trump administration have been around, they've had to revise them. I mean, I've talked about this ad nauseum, where jobs saying we have 250,000 or 249,000 or 180,000, and then it gets revised either to negative, or we actually see it go to 14,000 jobs. And this is not like once or twice. Right, mistakes. These has been consistently over a while now. So for them to sit there and say that is either you're feeding a narrative or you don't know how to read the data correctly. Or maybe I don't. I'm a novice. I don't got a doctorate degree, but I can sit there and watch the trend and realizing what's actually happening. So this is where like I struggle with that, because it's like we're seeing a sell-off in bonds. Like the actual bond market, the 30-year bond, we're seeing yields go up, right? Which means that they're looking to take more of the yield side versus the bond side. And so they want to take, they're taking more of the future side. If they do that and they buy the bonds at these higher yield rates, I just don't see us really, unless we have a major fall, there's no way. We're going to come into stagflation. And when that happens, people really stop buying. People stop buying goods and services. People are already being laid off. And like we'll see when it comes to job reports, I think that's really where we're going to see the biggest hit. Is we will see job reports basically be lower, and then we'll see employment pick up. And then, again, remember how we talked about, if it stays stagnant to what we had, and we don't see jobs being created and people going into jobs, right? Then that means if it's just normal, and then we see the employment normal, that means that more people have been added to the unemployment. The people who fell off, because remember, it was a 6-month rotation there, right? Once you fill the 6 month, you're done. They take you off. And if we don't see the other part where we see those people who've been pushed off get put into the labor or the labor force, and in particular private labor force, then you're going to see if those same people who lost jobs, and let's say they're making 100,000 and the only job they can get now is 75,000 or 80,000, and it's not at the peak what they were used to, we're going to see a deceleration within the market. And so I can't get behind this. Like, it's just not, to me personally, I don't think it's real. It's just not. And I feel like they're playing games here, and it's just political jargon that they're playing here. One being Jerome Powell, the other being President Trump, the other being the globalists that are playing at large here. So and I know I sound like a crazy guy, but I sound like a crazy guy 2 years ago, and all my stuff is starting to come out on point.
Well, I was just about to say that you had the same feeling 2 years ago about this, but also remember that there are big players involved in these types of things, and we're at our level, we're used to a Bitcoin market maker getting his way or their way and moving the market a little bit to stop people out and change the direction of the market. Other people are worried about hedge funds coming in and slamming a particular tech sector or sector of the Nasdaq or something like that to move the market and get an advantage. And then there's other people that influence the president of the United States to get the market to make money on big, huge macro movements of the market. And they do that by influencing what the president says in public, influencing what his advisors do, influencing the way they want the market to go, because they've already taken a position. There's probably people out there betting big money that interest rates are going to go down, and they're pushing hard for that to happen because they've got a lot of money at risk. And those are the top players in the market that, the big pension funds, the big hedge funds, when they put positions on, they'll do anything they can to get the market to go their way, including giving the president of the United States biased information to do that. And they'll lobby the lowest level of the statistics people to make sure the right information percolates up the chain. But anyway, Pedro, I think it's time for us to get Technical Tuesday started here, and me back on the road and in voice mode for a while. That means, ladies and gentlemen, as you well know, Technical Tuesday is the day in which all the leading world economic indicators come to light here via Pedro, for two reasons. One, to help you understand how your bags get fat or empty by what's going on in the world. And two, to educate you a little bit about the things you hear in the news and the financial news about the markets, and things that you hear in the regular media about it, which are usually wrong. And so you have a little education behind that, so you can go, aha, that's not right. Pedro told me that. Or, aha, Pedro called that 2 years ago and said the reports were bogus. But anyway, ladies and gentlemen, welcome to Technical Tuesday. All right, ladies and gentlemen, it's Technical Tuesday. It's time for Pedro. Pedro, I'm going to go off camera for a few minutes. I'll be back on camera in probably in about 10 minutes on the road again, but I will always be listening.
Awesome. That sounds a little bit ominous. And
I'll always be here.
Okay. So we've got a couple cool things here that I think are pretty cool. One being that we're watching the global markets actually start to rally higher. So you can see here that we're seeing, I guess I was wrong. The market is deciding to keep its craziness going, and we're seeing it push up. Last week, we saw it rebound off the low here, and we saw it bounce off that 50 period. The fact that it got this close on the 50 period moving average on that week, on that daily, which is the weekly 8. We came down, we pierced it. It doesn't necessarily mean that's a good thing. I'm not watching any real demand wicks being created, kind of like what we saw down in these lower levels, boom, bouncing and pushing back up. So again, to me, even though we're at new all-time highs on the world scene when it comes to the stock market, anything that's correlated there, it's one of those things that I'm looking at going like, okay, we're watching volume die off, higher volume of sellers 2 weeks ago of sellers. This last week we had lower volume, and we should have had higher volume. We should have been higher when it comes to the actual volume stepping in. And so especially on this ETF, which tracks the majority of the world's stock markets. So for me, it clearly states that we are going low. I just don't. That amount of volume coming in from the previous week right here, it just screams to me like this should have continued down. So obviously it was halted somehow at another place. In relationship to last week, you didn't see a huge conviction of buyers stepping in. You can see right here. Look at it, even go and put in a demand wick. So again, that screams to me there's not real conviction to this rally. How far will it go? I don't know. But if the market's moving up, we always go long. The market is always right in relationship to trading. If it goes up, we go long. So let's look at the S&P 500 with that said. It's pretty similar. You can see here from last week, right? We had the sell-off, we bounced off our area here into this week. We came down, didn't really put that much of last week's demand wick in, and then we kind of just pushed back up. Again, not a crazy amount of conviction when it comes to the buyers from last week, right? They just kind of pushed it up. And so for me personally, I'm just thinking, obviously the market is moving up. We want to go long as the market is always going up, but I'm not going to put in a ton of money here, like to sit there and say, oh yeah, I expect the market to continue up. Now, it all depends. If they drop interest rate, we should then see either two things happen. The market could go down or it could go up. And I know that sounds very basic, but there's a lot of technical jargon that correlates here. The sell-off of the market, if we see it go down, is going to cause some major issues in relationship to jobs. I think this is going to be a big correction. A lot of people that I follow also think it's going to be a big correction. And so how far will it go? We don't know, but I'm almost positive that we're going to at least see, I honestly think probably like a 30% correction, like real. And if that happens, then 30, if not even further. So I think they're trying to push it up to kind of mitigate the drop, but I think they're putting in their shorts and they're looking to drop this market here. We can't even get above the medium. I mean, just look at the volume here, the seller volume for this week compared to, or last week compared to the week prior. It's just screaming to me that they're looking to drop this market because you have less buyer volume coming in to seller volume. And the majority of these trades, you can see right here. Look at the volume coming in and look at the volume coming in on the sell side and look at the volume leaving the buy side, right? Even though we were pushing up, there's no real conviction to the buyer side. And so I'm looking at that going, or at least are there any demand wicks? And no, there's not. You can see here on the run up, you see seller wicks stepping in really. And then as we're now coming back up, it just looks like a rope-a-dope, like they're looking just to sucker punch us and drop this market down. So with that said, if we see this happen, I think I talked about this last week. that I expect that money to inflow into crypto, a lot of it. And so I think it's one of those things that we can kind of wait and see. But I'm paying attention to this area right here, see what's actually happening in relationship to what's happening with the bond markets. If you check here on the 1 month, we saw the sell-off in July, you saw it come back. But if you look at the 1 month, it's definitely coming down. They think short-term rates are going to come down. If the Fed rate drops, we should see the short-term rates really drop. And you can see here, even today, we saw it drop. If you look at today's 3 month, boom, drop. 6 month, they're expecting even more. Look, drop. 2-year yield, similar. Drop, came back up, hit the 8 period, dropping. 5-year, same thing. Now here's the thing about now we start to get above to the long term, it's going to switch a little. You'll see what I mean here. We saw a huge drop, come back, pull up. Now we're coming to the 10-year. You can see how we're starting to show a little bit more bullishness because of some of the things that America is doing, like long term, how we're trying to set things up, lower down our cost of spending. And most Americans are completely understand that we are literally killing ourselves. And I think the majority of us are going to start voting based off the debt because we don't want to lose the sovereignty of the US dollar and the hegemon that correlates there with us. And so I think we're definitely going to come and really start to make big issues with once we start seeing institutions like the Biden administration. And now I almost think that the Trump administration might be even part of that. But again, he's more for crypto and innovation, but it's still one of those things that I'm like, you're basically playing the same game, but trying to at least put crypto in it, which is good because at least that actually holds a system to be able to actually have sound money. But again, it's still being played with the same games that fiat gets played with now, which saddens me. Okay, so we're starting to see it push up on the 10-year. Now, what's interesting is we're seeing higher pushes up on the long term, which means people are more bullish long term with us, right? They want to buy yields and they think the thing is going to go. But if this stuff sells off, if we're seeing a push up on the higher end and the lower end is selling off, this is what we call a bull steepening. That actually starts to happen here. And so again, after a bear steepening and rebalancing into a bull steepening, typically you see things fall apart in the economy. We saw a similar situation like 2008 happening in this circumstance. And so this is what a lot of people think is happening right now, is that it's getting ready. They're positioning their shorts in to drop the market. And so if they do, it's going to hurt a lot of us, or a lot of people that are internally within the markets. Now, if you look at the 10-year bond actually is showing more strength than, let's say, the 30-year bond here. 30-year bond showing a little bit more weakness, but in the same sense, you still see it showing, it's bouncing off that 8 or not the 8, but the 20 and 50, which is the weekly, right? 8. So I would expect to see the bonds, the short term. Where is my 20-year? This is the 30-year. Give me 1 second. What is 20? I forgot what 20 is. Year bond.
Hey there, everyone. I have rejoined here temporarily while Pedro's looking that up. Thanks, everyone that's watching on Rumble. I really appreciate, as always. Remember, if you're watching Rumble on your big screen or even YouTube on your big screen, sometimes it's hard to log in and or create an account. But If you did do that, take your phone, go into Rumble, go to your browser, just type rumble.com and open up Rumble, search DYOR Media, find us, click the join button, and you can open an account with Rumble for free. You don't need to pay. And then hold on a sec while I merge, then you can hit that like button and you can comment and ask questions of Pedro. And I'd say that not because we need more likes and follows and reposts for materialistic or ego effects. We need them because it helps the Rumble algorithm know that you guys like our content. And that's what pushes us out further. Pedro and I have had some record shows recently here on Rumble, and we're only growing. And that's thanks to your help. So if you could do that for us, hit that follow button, hit that repost button, share, comment, drop the link in your trading group or wherever it is that you degen with your friends. Today's Technical Tuesday, so if you have some savvy investors, let them know that this is the place to learn about what's going on and why Pedro is skeptical with what the government is telling us. I should say why Pedro is once again skeptical about what the government is telling us and how he could possibly be right once again.
I hate the fact that I am right so much.
You know, it'd be better to be wrong. It's better that the government numbers would be that situation.
Yeah, I agree. But ultimately, this is kind of where we sit right now in history. And I guess this is always kind of how it's been in a sense, right? Where we see the government stepping in and playing games. But it's still sad that we live in that type of society, that we actually have to play that way. Let's jump here real quick. So we're watching bonds right now. It's kind of high on the 20-year. Obviously, most houses get traded on the 20 and 30-year bonds. And so the fact that we're coming back down and we're testing that 50 period moving average on that daily, and on the weekly we're testing that 8. I'm expecting us to see this thing kind of get going and pick up to a higher level. When I look at that's what I was missing. I was in there looking for it. I skipped right over this morning. That's interesting. 1 second. Actually, I can pull it up here. It's not even that big of a deal. Futures category, interest rates. Oh yeah. Where is this at? Come on. Treasury bonds. It's not what I'm looking for. But this will work. Let's try this here real quick. We'll do this one right here. Sorry guys for the I think we're EU contract. Okay, so for the 10-year, we're watching the bonds, and this is the thing this is what the Fed uses. The 10-year and the 2 years, really the correlation that they're looking for, and it actually has to do with more interest rates. But you can kind of play the same difference. It's just going to be inverse of the play, whereas this market is pushing up to come down to go to higher time frames. And if you look at this, right. This is in relationship to interest rates. If interest rates sell off, the bonds would come down first and then go up. This is what I'm expecting this market to do. And you can see here that over the last few weeks, even the last few days here, you can see the amount of volume stepping into the actual buyer volume stepping into the actual current futures. And we can actually even take this out. I think it's Z. Let's check out Z contract. Right, you can see people are actually establishing their orders currently at these higher rates, right, or at these at the higher rates or lower bonds, and so they can ride this up. So you can see here that even into next quarter's futures, they're planning for this to go up into the next futures contract here. And so this next future contract then simply symbolizes that if they're already buying out more bonds in the future, into the futures, then they're expecting this to go higher, which means that they're expecting rates to drop. Hence, that means that we are going to have some form of crash, some form of instability in the actual real economy, right? And the idea of, nominal, like real growth that correlates to that is going to be stagnated. And that's what they're planning. Even though they're saying good things are coming, it's not. So that's why I'm looking at these things going, if in the futures, like, and this is the futures trading area, that 10-year is a significant area, and just paying attention to how they're even building. And you can even take this out, and then I believe, I think what is Monday? Trying to remember. Z. Why am I forgetting? Is it? It's not U. It's not M. I guess we could do M26 and see. Will it give it to me? I always forget what the first contract is for. Give me 1 second. Let me pull this up here real quick. Come on. What? Give me 1 second, guys. Sorry about that. Breakdown. Boom. There we are. F. I was sitting there trying to remember F. Let's check out ZN. ZN. It's going to be F. It's going to give me 2026. No. Why are you doing that? It's not what I put. ZN. Let's see if it'll give me into next. There we go. Boom. 8, not M. Why did I say F? I'm at 8. My brain is like farting.
Anyway, right, so shout out to Crypto Mike here. Thanks for joining us from Kanukistan. I have left Kanukistan this morning. The missus and I are on our way to the East Coast to meet up with Sir Pedro here at Pedro Damas. Good shout out to Fire Chicken. I believe Kumgar is lingering out there as well, along with Chuck Jansen of Fire Chicken project, which they are about. Pedro, I think they're about to hit $100,000 market cap there.
Yeah, we're gonna check them out. We're definitely gonna check them out.
Moving and grooving.
They are a moving and a grooving. Give me 1 second here. Boom. There you are. Play this here real quick. Okay, here we go. All right. So you can see here, even into next year, all right, they are positioning themselves in the forward contracts. We're talking 6 months out. Look at the amount of buying volume that they have in this area here. Okay, that's a substantial amount.
Which contract is this, Pedro?
This is March of 2026.
I mean,
So-
which asset?
Oh, I'm sorry. This is for bonds. If they're planning for bonds to go up that far in the future, because they're buying in out 2 contracts ahead, that shows
Right.
that shows us that they plan this to happen over the next 6 months, right? And so we'll see bond prices go up, which means that we're going to see a drop in interest rates, which means if we see a drop in interest rates, 2 things either happen. It's complete catastrophe and oh shoot, right? Like that's not good. Or we actually see that the Fed is being nice and they're willingly trying to make sure that America doesn't have to pay higher debt because they're that benevolent to the American people.
Right. Well, it's one of the things to remember is that the Fed isn't just Jerome Powell. We talk about this a lot, and that it's a committee, and they vote on these things. And one of the things that was brought up today is that they can vote. They can vote to have interim. They don't have to wait for their monthly meeting. They can change the rates at any time. And if all of a sudden numbers got corrected, it showed jobless claims were way out and many more people are unemployed reporting, or inflation was much higher, they could step in and lower the rates. Anytime they used to do that. I mean, the Fed used to just change for you'd wake up one morning, the Fed like, we need to point or something like that on a regular schedule. It's only in the past, I think, 20 years or so that they've done that, and really the advent of social media, their importance kind of growing. But people have been playing those bond games, as you know, for a very long time, anticipating what they do. And if they're buying those outlying, excuse me, hold on a second. If they're buying now outlier markets in the months on the future contracts, 2 out, not 1 month out, but 2 out, that does say something, because the people that are putting the big money into those are the same people that I was speaking about earlier, that have the big time say in where the markets go. Like today, I listened to the chief economic strategist, I think that was her title, from BlackRock, talk about whether they changed their asset allocation after the Trump tariffs came out, or just the talk of it. And she said, not really so much. They have a plan, and the tariffs affected just a little bit in some sectors. But I think I'm going to go back and re-listen to that to see if she mentions bonds at all. Because it could be, somebody like BlackRock, who's, one of the big people that goes to the repo window to lend money to the U.S. government, might be one of those people buying bonds in the outlier months because they know it's coming. Because if there's somebody that's an insider, then BlackRock is it.
BlackRock, Goldman Sachs, it's a litany of them. It's right. If one is given, they're all the top tier family, and I mean the banks, and I don't mean like the Illuminati stuff. I mean just like simple, the ones who loan the money, the ones who actually go through and set things up in a way that causes things to happen. They're going to be given notice. It's not like they're not going to know, and so they put in their positions to take advantage of the market. It's just what they do. On the back end, if you look at the VIX, and this is kind of a sad note, is you're actually watching volatility drop off. Look, we're seeing it come down here. Last week we were talking about how with some of the talks going on that we saw it go up, right? But now I said I had expected to kind of pull back, but it basically dropped down to nil here. And so I'm just kind of going, something a little fishy there. But again, it's all based off the numbers that the government gives. And, you know, everything is peace and security right now, you know. So, of course, this is going to drop. I thought maybe that this would play more into the hands of, like, people would actually gauge it. But the VIX is showing hardly any volatility, any fear in the economy. So you play it. If this is going down, you play the short on this. Where is it at? The Chinese. Offshore, Chinese yuan. Yeah, never mind. We won't go over that today. Let's check out the dollar here. Actually, we'll check out the PGJ. We're watching China's economy starting to go up with talks of restarting the tariffs. So I would expect this to go up. We played nicely off of the zone right here, that 31.30 area. Came down to a lower 28, starting to push up again. You can see here that even though it's pushing up, it's not like it's a ton of volume stepping in, but it was, when we see the correlation, we'll see the correlation really start to push higher if Trump really starts to push hard on the back end about, all right, we need to take care of China, not take care of China, but take care of the, let's go ahead and get the trade talks started with them again. Now, it would not be smart for Trump to do that. The reason why I say this is if it benefits him to hold out as long as possible on tariff talks. One, because he's receiving more income, but two, and this is really important to play, that if he holds out Americans' goods that we like, I have a friend of mine, he's huge into vaping, and he's just saying, bro, like the vapes, they're like 98% of them are literally made in China. If you're going to do a business, it's best to actually start a business now in America for vapes, like get a manufacturing company. So if you can, like, if you can get it through the red tape, you can get through everything that correlates with manufacturing and get it up and running. Right now is a great time to start manufacturing in America. But on that back end, though, as you see, is that there are a lot of supply that is literally dwindling. And so prices are going to start going up. But more importantly, as this happens, I don't think that we're going to see a huge price gouge. Maybe on things like, you know, vapes or cigarettes, or, you know, but cigarettes are made here more in America. But in other places, I think what's going to happen is we're going to see the American ingenuity step in and say, yo, there's money to be made here. Let's start making vapes. Let's start making these e-cigarettes. So it behooves Trump to keep the tariffs talking.
Yay, let's make cancer. Woo, we brought it back to the US. We made cancer.
Yeah, we're the originators.
Those vape people are the lowest scum people on the earth. And now, and ever since Phillips bought them, so they dish out cigarette cancer and vape cancer. Just love it. Drives me crazy.
I mean, what do you know? People, like, more people die. What was it? Was it more people die of drunk driving? Well, not anymore. They used to be. Never mind. That's an old statistic.
Yeah.
But alcohol.
Well, the people aren't dying from the vape stuff yet, but they will be soon, because they've been ingesting, you know, strontium and magnesium and galvanized metals into their system for the past, you know, many years. And the liver is there, and it filters out things like alcohol. Your lungs don't filter anything out. Any metals you put in them are there forever. And all that burner that you light, you know, every study shows that burner degrades each time you pull in on it, and all that just goes into your lungs. it's going to be cancer, and there's going to have to be a big cancer fund set up, just like the cigarette one. All right, someone close to me have a big problem with that. Wink, wink, nod, nod. Yeah, it's taken over the high schools.
Yeah, it's one of those things we'll look back and kind of go, again, another black eye for Western civilization.
Yep.
But on the back end, by looking at what we're seeing here, it behooves Trump to go ahead and sit there and hold off as long as possible, because if he can't create the manufacturing jobs, then he's not going to be able to really, for lack of a better word, get everything up and running like he's trying to do. So
right,
that's what needs to happen. And if he can really just obfuscate, am I saying it correct? Obfuscate the
it's
red tape.
Obfuscate.
All right. The red tape that correlates with a lot of manufacturing plants, if they can get that up and running, it will help out the economy. I mean, like I said, it's a 2 to 1, it's almost a 3 to 1 ratio, 2.69% ratio of increase in productivity to the GDP internally, and it's real jobs. And so even if those jobs over the next 3 to 4 years, 5 years get taken over by robots, it will keep us past the interim. It will get us past the interim. I remember I talked about how there's just going to be this moment where AI that will become corporeal and robotic format, and you will be able to have AI controlling plants, much like what we see what's happening in Amazon, but this will be for the worker. But there's this point in time where you will see, like, as
right,
employment is dropping throughout the world because of synthetic workers, it will become, though, they will be able to produce more goods and services, offsetting the prices, hence actually dropping inflation. But there's going to be this inflection point that if America doesn't become the leader in that, our economy will drop. And so this is what Trump needs to do. He needs to get those manufacturing plants up and running, get them going, creating real jobs. And then as the rest of the world flounders and starts to basically implode on itself, we will still be the top of the, I hate to say, the food chain here in America, because the fact is that we are producing more and our economy will be offset versus dependent on what is happening around the world. And so it's one of those things that there's got to be this balance there. So this is, again, why I look at the PGJ.
Well, there's a lot of problems with this, Pedro. There's still a lot of problems with this, with Trump's plan to bring manufacturing back. And here's a great example that's been in the news lately, and that is the chip maker Intel. Now, many of you don't know, and I had to figure this out last year around this time with the help of Chuck Jansen and AI, I might add, that NVIDIA doesn't make anything. They have no factories. They farm everything out to Taiwan manufacturing, blah, blah, TMSC, whatever the hell it is, to Fox and a number of other chip manufacturers in Taiwan and around the world. They have lots of research and design plants and do make their own chips, but mostly on a research and design basis. Intel, on the other hand, makes almost all of their own chips. And Intel has been getting hammered in the market. Intel makes a lot of chips in the United States. And as part of the program that the U.S. government set up to incentivize chip makers to locate in the U.S., Intel has been a beneficiary of that. Still, the chairman of Intel, chairman of the board of Intel, is out there saying that they want to get rid of all of their factories and just farm everything out to Asia, just like NVIDIA and AMD does. And the CEO of Intel, who's Chinese, first of all, disagrees with them on it. He wants to build the brand back up. And if you don't know that Mr. Trump just criticized the CEO because he's Chinese and he has too many links over there. He claims there's a grand conspiracy to move the chips all offshore. So we have, first of all, we have the political talk that's a mess. And second of all, even with all this talk about onshoring stuff and bringing stuff back in, you still have the head of the largest United States-based company that manufactures chips, not just farms it out like NVIDIA. But Intel, they have plants, they have people, they have jobs, and they're saying, nah, screw it. We want to get rid of all of that and farm it out so we can just buy these chips cheaper from companies in Asia, and we're not stuck with these legacy costs here. And I mean, it's hard. It's hard for Mr. Trump to get to accomplish what you're just saying there by saying, in order for this to be successful, he has to get the manufacturing plants up and running. Yet here are companies perspective, simply the patriotic perspective of like, we need to make sure that we're not reliant on Asia for chips. And our largest manufacturer saying, screw it, we want to do that. Doesn't bode well for me. That story didn't sit well, and it's probably Mr. Trump's advisors are probably going, oh shit, we need, this isn't going according to plan. Oh, I can't hear you. Can't tell if it's me or not.
No, it's me. Sorry about that. Can you hear me?
No.
So you can see here, look at the Dixie here. The Dixie is pulling back down to our lower levels here. Ultimately, I'm looking at the 8-period holding here. You can see here that we came down last week. We came down into the beginning of the week. So this is pretty much like the second week coming in. We're finding support. First part of the week, we've come down. So I'm expecting the US dollar to push back up into these higher levels. We hit our first target of that 101 area from our lows down in here. And so obviously the 1-to-1 ratio, it looks pretty good. We saw the pullback coming in, and what we're wanting to see for the US dollar is to hold at these levels here. If it holds above that 8-period moving average sitting right there, then I would expect it by the end of the week to push higher and go clear up into that 102.39 area, if not further up, even into that 105.30 area. Is really what I'm looking for to see with the US dollar. You can see here real quick, CL is continuing to drop as I kind of expected, down into the 62.40 area to that 62.17 area. Again, as we see crude oil drop, that's more money in your pocket, and compared to all things else, because crude oil is what is used to create the majority of the products that we use, from our cars to your sheets that you sleep on to even your medications. Many of them are, it's just what holds your medication. It's just it, plastic. That's what I'm speaking of. And so this is controls it. So as this drops, the price of everything drops. You can see here that 62.61 area is looking good. I think we're going to see even a bear, because even right now we're about halfway done with the day, and the volume for today's seller volume is probably going to be as much as we saw on Friday, most likely, which is going to be there, which is going to overshadow yesterday's small little pump up. So down between that 60.59 area to that 62.60 62.61 area is what I'm looking down in these ranges here. And it still allows people to produce oil, but keep things and prices cheap here.
I want to welcome Pure Chad to the show. Pure Chat had a comment about popcorn lung is what the kids are getting from vaping.
Yeah. It's
anyway,
crazy.
but Pure Chad, thanks for joining the show again. Haven't seen a comment from you in a while, so thank you for coming back and interacting with Pedro and I. Yeah, we've got the remote version for me of DYOR Live here. I'm in the car, and looks like I'm in just about ready. Looks like I'm in Massachusetts now. And tomorrow I'll be in the studio with Pedro live.
That'll be fun times.
Like hell. Come on, guys.
You're right there. So we have the Chinese yuan offshore.
Yeah, it's a toll road here, but it's not easy pass. Sorry.
It's all right. So we're coming down to this area here of supply. It is looks like a monthly zone here. And so I expect to see some resistance. We saw it kind of push up, but it looks like the Chinese government, the CCP, is up to their old tricks, and they're trying to drop their currency. And so I wonder if America is going to step in and be able to buy it, if this is going to be like a tit for tat. But we're coming down into this level here. So if they push it through this level, the next level is going to be down at that 70-40 area. So I'm kind of paying attention to here to see what's actually happening.
That would be funny if the U.S. stepped in and supported the Chinese currency by buying $1 trillion worth of it.
Well, because they manipulate it. And so I think what would actually happen is the government would actually have to step in and make it obvious that they're absolutely manipulating it, so they don't, like, it's literally, it's crazy. These geopolitical movements are actually happening right now. I don't even understand it. Canada for a few weeks, Calgary, Alberta. Cool. So yeah, it's real funny what we're seeing. Yeah, glad to have you, Pure Chad. You rock the mic, man. Let's jump here real quick. You can see here. Oh, and just give everybody heads up. I plan to have a short technical Tuesday, so we'll probably be finishing up around 1:30. As you can tell, I've been kind of pushing through this pretty quick. Not really talking too much in detail about everything. Almost forgot gold. Give me 1 second. Gold right here is putting in some seller wicks here. I still have Cowtown. Ooh, Cowtown. You can see here that we're putting in a lot of seller wicks. This is gold. I revamped our target for this year to 3,800 basically for gold. I think we'll probably hit that again, especially if we really start to see things kind of fall apart in relationship to the economy, and so everybody will run to gold. The fact that we see gold still up at these levels show you that there is fear in this market, that people are looking to diversify. I mean, we are literally just percentages from the top here, and that's a big deal. It's a really big deal.
Isn't gold's up 25% this year?
A lot more than 25%.
Oh yeah.
Yeah, dude. I mean, it was at 26.75. That's the start in January 9th. It was actually lower. 6 December.
Yeah, it's up like, what's it, 3,800 right now?
Yeah. So right now it's not 38.
It's like up like 40%. It's like 35, 40%.
No, it's up right now. At the high of this year was 35, 34. Right now it's sitting at 33.99 or 3,400.
Well, that is 25% then. That's amazing though, for gold to move that much in 1 year when there's no war. Well, there's no war. There's no big war that the U.S. is funding. Well, that's not even true, I guess. But you know what I mean. There's no world war going on.
Oh, you're right, 25%. Yeah, I had to sit there and run the numbers real quick in my head. Yeah, it is, but its peak was 3,500, so it was almost like we're talking 25-30%. You know, like when I was looking at it, like it's going, and I expected to get to that 3,800 area, simply because of market movements, percentages of moves that we see per leg. Right, this is the next per leg move compared to the low of here, right? The push up, down, push up, right, is roughly right up in these levels here for gold. So it's pretty interesting. The fact that we're seeing copper sell off and stay at these low levels show an indication that there really isn't demand for building around the world in China and America and everything else. And so this drop here that we saw come in, it's sustaining its low, truly show that there is a depression. That's the wrong word to use. There is a suppression of the economy here that is just naturally that's baked, that's not being reported, right? Like this was all speculation, right. And then once Trump said, knock it off, boom, like you saw it. And this is the part I want to bring in. Tariffs don't have a real inflationary, it's a small inflationary, inflationary aspect in the market. But the reality is is that most producers and store owners, when it comes down to it, if people do not have the money to buy, because again, we're seeing slowing down in the economy, people are not out there buying. They're not buying stuff. And so people are hoarding on to their money. And am I going to go into a store that is going to charge me? No, I'm just not. So who's going to have to eat the cost? It's going to be businesses that are going to eat the cost.
Right.
And so this idea then is suppression on how much they can buy. And then we see a slowdown again. Do they hold the prices at that level where people can't buy it, or what are they going to do? They're going to drop it. Movement in business means money. When you have stag, when product is on the shelf and it's not circulating, that means you're losing money. So that means as a person, if I'm looking at this broad market economy and I'm seeing that copper, which is basically the bellwether of growth, basically drop off the face of the planet, and then in additionally to that stay here at these levels, to me I would look at it and go, that is a false prediction of the true growth of the economy, which means that it was inflated and there's not real demand there. And so it just makes sense to me to sit there and say, and
hey, Pedro, one of the things that sorry, there's a delay here. I thought I caught you at a break.
Go ahead.
No, what I was going to say is regarding the prices of goods and tariffs, one of the things that people forget about the basics of economics is that, and the news media is getting this wrong currently, is that they mistakenly think that the supply chain and the cost of what it takes for somebody to build something sets the price. What sets the price is what the person, the buyer, is willing to pay for it. The manufacturer can suggest a price, like, yeah, well, we'd like to sell this for $100,000. Look at all this research we put into it. But if the market says, nah, we only valued that at $40,000, that's all they can charge. They can't charge $100,000. And if the tariffs come in and raise the product by 15% or 20 or whatever it is, the media's like, well, the consumer is just going to pay that. No, they're not. No, they're not, because the most price is not, what's the right term I'm looking for? Inelastic. That doesn't matter what the price is, people will buy it. Most products that people are price sensitive to, and they just be like, no, we're not going to buy that. And so the store is going to have to sell it at a loss. The suppliers will have to eat it. They'll have to figure out a way to get their costs lower, whatever the story is. But ultimately the buyers set the prices for everything, because they'll only pay for so much. When the prices of things go up,
so
people buy less of it. It's a simple thing.
deflation is a real thing. So remember I was talking about how I expect the CPI and everything else to start really dropping, like to a point where we see deflation. I still believe that that the numbers that they're reporting there, as it starts to drop off and we see deflation happen in the economy, then we see a contraction within the economy. It basically shrinks in on itself, and then from there it will germinate new business, create businesses will be lost, which breaks my heart. You know, like those are going to be real jobs, and a lot of small businesses are going to be hurt. But more importantly, large businesses are going to be hurt as well. Whereas during COVID, we saw big businesses flourish and small businesses fall apart. This time around, we're going to see major large businesses, Walmarts, and they'll have the wherewithal to be able to pull through this. But on the back end, you'll see a lot of them struggle, and they'll have to drop their prices because people are not paying. I mean, if you look at just the value meal on Burger King, you go to Taco Bell, you go to a lot of these other places, people are not paying for the actual prices that they're trying to charge there. They're just not going there anymore, because I can either decide to go to McDonald's or I can go to a restaurant. I'm not going to McDonald's over a restaurant if I'm going to be paying the same prices, right? Like it's just, and so right now we're also watching the restaurant index starting to drop. We'll go over that there actually tomorrow, because I've got to speed this up here. So MicroStrategy is starting to drop down through here. And what's interesting is, as we're watching MicroStrategies drop, Bitcoin is actually starting to push up here, which is really interesting to me. I wonder what Michael Saylor is thinking. You know, like we're starting to see this kind of come down here, starting to put in seller. Is Bitcoin going to see a sell-off, or is Bitcoin going to see a push up? When I look at the volume here, we're not seeing a ton of buy volume coming in right now. You can see this area, but here's the cool thing by here is we're not seeing it dropping though as well. I mean, just yesterday's candle was an indication of, yeah, we should drop, and it didn't. So the reality is this, is that it's pushing up here. Either it's afraid and waiting for the correct numbers to come out in the economy, or we'll see it and then we'll see it rally, or we see it drop because just waiting. They want to drop it to the next liquidity area, which is around that 112, 210 area. So we'll see what happens there. When you look at Ethereum is pumping like we talked about. I said I expected to just slough off this little area here that we saw yesterday. We saw it kind of go down and put in.
I can't see the screen. What is the current price?
Now it's moving up. That I expect to see, and I'm going to bring this up, that 5,000 area, we should see some type of resistance come in on Ethereum when it breaks the all-time high here, and then we'll see it pull back. Again, we always bring this up. It should go up, boom, find support around here, this area, find support, and then come in, most likely hit that 8 period, and then we'll see the market go up. So
what pricing levels are those, Pedro?
5,000 will be the area I think we'll see them sell off, because remember, this was 3,300 where it started on the last pullback, and then it really found support down here at that 21, 23, which is going to be almost a full 2+X here. When you look at this higher level right here, us hitting this area, which is that 20 or 42 area to that 44 area here, this area is basically, like you can see here, has been that resistance here. So it blocking this area and finding support, basically just pushing through, finding support on this as it pulls back, right, shows me that pullback with not a lot of sellers, meaning people want none of that selling volume here. Like they're like, just give me more ETH. Is what any way I can get more ETH. And that's exactly what's happening here. That's exactly what's happening. So it's going to be that 5,000 area as a whole number is where I'm looking for resistance to kind of come in. But then at the same time, if it does come in, and again, that's just basically 150 points above the all-time high here, we'll hit that, boom, come down. I don't know exactly where. I'm expecting it's going to find support back on that 8-period moving average. And then when that happens, we'll see it continue up. And there it be. There she blows. You know? And so, like, again, I've talked about ETH at the beginning of the year getting up. Actually, in January, we talked about this during the inauguration 6-hour marathon cast that we did.
Right.
We talked about it getting up to that 13, potentially 15,000, especially with all the new treasuries that are coming out that are similar to what we saw with Sailor and Bitcoin Treasury. We're gonna, people are definitely gonna want to do that with Ethereum. And again, I think we're going to see an explosion of Ethereum that we'll see a 20%. Again, 5 to 20% ratio to Bitcoin, right? And so in that same sense, I'd say the lower 5% because that would make it around 5,000, 6,000. But we could see a 20,000 Ethereum based off of what people are talking about on the street for ratio wise. So this is why I play more in between the 10 and 15,000. And so if that happens, this is going to be a fun ride. Let's go. What does Pure Chat say? Cowtown. Yeah, bleach, blonde, cowgirls, blue jeans, loving it. Silver was making moves too. Oh yeah, we'll go over silver in a second. Forgot that. What time is it now? I got 5 minutes. Cowboys is closed though. A big drop in vacationers too. Recession showing. Yeah. I wonder if where are you coming from? You're from Canada, it looks like. Alberta. So yeah. And your government's not going to give you the correct data there. They'll lie to you guys' face every time. Ask Tom. Tom, you frozen on me. Where'd you go?
They did.
Big drop in vacationers too.
Here.
Oh, you're breaking up. Bad. A recession showing. Builders materials are about to double in price. Just renewed my, just redid his basement. Crazy. If you have Amish nearby, they're selling lumber much cheaper. There you go. I did not know that. So Pure Chat is talking about himself. We should see prices drop, honestly, in relationship to this, just simply because when you look at the economy and what's actually happening, the economy can't sustain the prices in which things are at right now. And so because people aren't buying it. And do people keep the same prices and allow their product to sit? Which isn't going to happen, right? And so they're going to lower prices. When prices start to drop, then we'll see things going. The other part that he could do is he could start allowing, he could put an initiative, but again, he'd overstep state rights here if he doesn't. When I say this, Trump, he basically just put in saying, hey, y'all need to start creating more houses so that people can live in it, which would drop the prices of housing, but honestly jumpstart people buying houses. And then what would happen is we would then see the cycle of people buy a house, they fill that house, and they buy everything under the sun that costs to build that house and to fill it. And so that would be more of a smart thing. Renovated. Gotcha. Canada is whack. I'm leaving. 2 years selling Canadian assets off and moving to US, Florida. Let's go, Pure Chad. Someone knows what's up.
Pure Chad going to Florida.
Come through, dog. Shoot. But like on the
bleach blonde cowgirls in blue jeans, loving it.
Where we at? We'll just check out silver here. Where are you at? Silver. There we are. Silver here has been pumping, but we saw the pullback here. Again, this is an expensive commodity to trade. 25 points a tick. This baby's, it moves, and when it moves, it moves. So it's an expensive contract to trade. But if I am going to trade it, I always make sure that I'm near that 50 period moving average. It holds pretty strong. So if we come back down to the 50 period on silver, we should see it kind of hold on here. Because of the relationship between it and gold. If gold keeps going up, we should see silver continue to go up. Now, are we going to see it get to all-time highs? I don't think so. The reason why I say that is because it would really hurt a lot of the producers who create electronics, because they've got to buy that on the open market, and it just hurts them. So we'll see what happens there. But yeah, silver is continuing higher here. That's pretty much it. You can see here on the monthly, we put in a little bit of a dynamic, but it will most likely hit the new all-time highs. So it's going to be, or not all-time highs, but that new local high here, ranging between 39. So it should hit that 39 and continue higher. How far will it go? Let's see here on silver. Oh, okay.
Sorry, I can't see the screen. Is silver reacting like gold?
No, it's not as strong. But what it is doing is it is expanding, though. It's moving up. So I would expect it to come and hit this area here. And so its resistance level here is roughly around that 44, 43 area here on silver. So I expect it to come and tap that area here. So that's about 5 points away on silver. So it's still got some legs to go, but it's not like it's at all-time highs like gold is at, or it keeps nearing all-time highs. So it's going to be really interesting to see what happens here. They've also talked about going back to the gold standard. And if they were to do that, we could actually go through.
Impossible.
And, well, here's the thing. Right now, gold is sitting at 3,500, 3,400. If they were to restructure the dollar to the gold standard, when we pegged it originally, I think it was $10, $10 or $20 is the price that it was at that time. So if we were to go back on it and sitting at this price, like all our gold in America is pegged at the price of gold at $10. So, and America has quite a bit of gold. So if we repeg it, we're talking it's almost 300x, at least 3 to 900x.
Yeah, where does that money come from, though? Just deficit spending? I mean, you can't just reprice gold and create money.
Yes, you can. This is the part that's crazy. Now, will the world hold to it? Maybe, maybe not. I mean, if America now is wealthy again, right, and our debt is minuscule compared to what we actually hold with the real pricing, then will the world sit there and just follow the hegemon of the dollar again? I think they will, because we got more bombs. But the problem is that now we're dealing with with China. Is China going to be okay with that? Are the Saudis going to be okay with that? These are major people that potentially we're going to have to deal with. Obviously, Russia is going to hate it, but this is this play that, and it was actually Dalio who actually brought this up. He was on a talk show. I was watching it on Tom Bailu.
Yeah, I don't believe him. Don't believe him. There's no such thing as a free lunch. And somebody, if you repeg, if you just say gold is now worth this much based on the U.S. economy, then that money's got that value has to come from somewhere, and they can say it's worth that much, but it won't really be that much, and the black market will be a much lower. It'll be like the black markets and currency exchanges when governments say it's really this much. The market will set the price for it. And of course, obviously, if they repriced it at much higher, everyone would sell all their gold, take the money, wait for the price to drop back down to the current levels. To me, that seems far-fetched.
I don't know. Again, I wouldn't have thought that America would have printed 40% of its currency in a year than it's ever done in its lifetime, right? So, and I wouldn't have ever thought that they would shut down the whole entire economy based off a sickness that was really bad. But was it really worth shutting down the whole entire economy? Right.
It was not.
So, right. So I'm not saying that it was good or bad. I don't want to get into that craziness. But what I want to say, though, is was it truly worth that ability to shut everything down? And I don't think it was. We saw multiple nations around the world that didn't follow what we did, and they did okay. They had deaths, but it was
Sweden was just fine.
Yep, exactly. So there's these other aspects, and when we look at the economy, it could happen, and I don't know if they would, but it was one of the things that were talked, and it is out there. I mean, when push comes to shove, if the U.S. debt really starts to scream up, the last ditch resort is going to have to be repriced gold. So it's going to be really interesting to see. Next, let's go in. We were just talking about Ethereum. Like I said, I expected to hit that all-time high by the end of this week for Ethereum. Let's check out BNB. BNB is coming up again to the all-time high, to that 861. I'm cutting out.
I think I am just in the middle of nowhere.
Oh, I got you. Okay.
I'm in the hills of Massachusetts, so when I go in a valley, it's not good.
Those hills during the fall time are beautiful. Absolutely beautiful. All right, so let's check this out here real quick. Now, I'm looking at BNB. BNB is showing mad strength. It's going up. Yes, we're not seeing a lot of volume, but the reality is we know that there is I think we're about to see another ICO along with altcoins really starting to go. I think it's going to be everything's going to run. I really do. And so I think regardless of it showing me less volume here, right, and we saw a big old volume spike down here, I think this was a liquidity pool, a stop run here for them to get all these stops here. But even though it was coming down, you saw volume step in on the buyers, not a lot, but you still saw it step in, and we're still pushing higher. So I'm expecting BNB as well to go higher. Same thing, like we already talked about XRP yesterday. So nothing's changed there. It's pushing higher. It's just partly what it is. Tron, similar. This thing just went to its all-time. No, I thought it was all-time high. All-time high is all the way at that 45. But you can see here that this thing is just non-stop pushing up. It's down at that $34 or 34-cent mark area. Like I said, I expect to see Tron at the $10, $15 area here. Dogecoin showing some strength, pulling back off of that 8 and continuing up. Let me remove these now. Boom. I expect to see it continue up even higher here. I do think we'll see Doge put in. We saw it come down, hit our area. We should see another higher high. We'll probably get to 32 cents. Matic is going to look similar. You can see here we're bouncing off the 8, and it's going to continue high. I talked about this last week. That Matic, I feel like, is one of those undervalued ones. It's made in America. I think it's going to be coming in and really setting things up correctly. And I know that we don't see a lot of movement in Matic. Just the fact is that it's an American, and I just don't see it not being part of the strategic reserve. ADA, Obviously, Cardano, we're seeing it step in, creating the next leg up, pushing back up. I honestly think that 118, 117 area here is really the next leg up, sitting at 82 cents. So if you want to play that, that'd be a great play on the futures. Let's go ahead. Let me move this. Again, I'm expecting us to blow through this area. I'm going to remove this back. Now, and we're going to wait for this level here. We should, when we come up to this level, like we should see, kind of see bust through here, come back down, find support, go right here, see it pull back, probably to the $1 mark again, and then push higher to that 132. So these are my moves that I'm expecting to see here over the next probably month and a half here. You can see here Solana. Solana is looking similar to what we're seeing within Cardano, ADA. Like I said, that's what I expect. It's something similar. We'll see a hit above this high. I'll probably come and try to tap the all-time highs after this level here once we blow through that 105, or excuse me, 205 area. TON, similar situation. We had resistance. We blew through it, found support on the lows here, and now we're seeing a push higher. You can see DOT again. DOT is similar. I'm bullish on DOT because it's an infrastructure standpoint, just like Link, and so I'm definitely looking to be buying more of DOT. When you look at AVAX, AVAX is looking, come on, strong as bull here, and I think coming and touching that 41 to 39 area here is going to be nice. Again, you're still going to come and test that 400. We got to get above it and come down to push up even higher into that 41 area. But the price,
hey, Pedro, didn't you say you had to be somewhere?
Yes, I do. Thank you. Yeah, so we can go, yeah. All right. You're right. So that's about it, guys. Thank you so much for coming in today. Oh, shoot, we got Norton. What's up, dude? Looking good, Pedro. Thanks, man. I appreciate that. Yeah, I cut my hair from a kid.
We got 76 Norton in the house.
Yeah, we do. I see him. Yeah, it's good to see you, brother. 76.
He came at the last minute.
Hey guys, could you do us a quick favor? Since we got the whole entire crew here, appreciate you. If you guys could hit the share button on a.
But we're closing it out.
Yeah, but it still doesn't matter because it will still push the algorithm to initiate for people to come see. So if when somebody comes on the side panel, it'll show up. Oh, go check these guys. You'll like them. So if you guys could do us a favor, hit the share button onto your preferred social media platform. That helps us out. Yesterday, we got up to almost 300 plays just on a typical show. And so we're trying to get the same type of plays there. So if Rumble sees that and they realize, oh, people are sharing our stuff and they're also liking it, it means a lot. And then one last thing, not in the comment section down here where the message is, but if you go down into Rumble where it says comment section, not the messaging, but the comment section, and say something like, say something.
Great show, fellas. Or ask a question and we respond to it. We respond to pretty much all the comments except the spam. Sometimes that too, because it's engagement.
Yeah, I was thinking, I do. Say something. That's funny. Okay, but yeah, any bit of that helps, and we just have fun with it. One last little thing, I want to bring up Fire Chicken. Fire Chicken, bro, is we're about to be out of here right now, dude. I promise you, we're done after this. Fire Chicken, dude, fat candle, dude. It's looking fire, man. So I'm looking forward to seeing what these guys do. They're almost at 100,000. They're literally 93,000 here. We're seeing volume step in, which is pretty nice. That's consistent amount of volume. They had a big push up here. And so look, that 8-period moving average is strong as bull, man. Looking forward to seeing him hit that 100,000 market cap. All right, guys. So that's it in a nutshell. I want to say thank you to everybody from coming in and watching us today. If you like the show and you appreciate what I'm doing here, please do me a solid favor and go through and just hit the like button and share button. Then click on that button so the algorithm realizes, oh, people are clicking on it. It would really help if you could click on it in an incognito window. That's the best thing, because that then just says to the algorithm, oh, snaps. Oh, snappity snaps. These dudes have
the share link was activated.
Exactly. Keyword Scooby snacks. Oh, snappity snaps. These guys have Scooby snacks, and they want to give it to everybody. So that's a Pedro.
All right, Pedro, we gotta end this. Ladies and gentlemen, on a programming note, tomorrow I will be live with Pedro on air at the same time in the same place, which, if you can believe it, Pedro and I have only seen each other in person once before. That was in Toronto, 2023, 24. And we will once again doing the show, doing our Wednesday DYOR live from the New England headquarters of DYOR Media. Anyway, ladies and gentlemen, thanks for joining us. As always, my name is Tom, otherwise known as Striking. The man that gave you all the great info today was none other than Pedro Garcia, the crypto chart analyst. And Pedro Damas, pay attention to what he's telling you. He is very often right on that, and we will address that in future shows. But tomorrow, we'll have more great stuff for you, so be there.
Yes. All right, guys. Much love. You guys be safe. From my heart to you guys, be safe. All right. And we'll talk to you guys tomorrow.